The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it started out as a quiet day on Wednesday in the grains and oilseeds and the livestock trade, but by the close, we had plenty of red on the screen, led by wheat futures to the downside. March corn couldn't hold above $5 on the board. It was a tough day in the hog market as well. Soybeans leaked lower, just felt like a tough down day. Money flow kind of flipped near the end of the session. Let's talk about it. Joining us now, Mike Zuzolo with Global Commodity Analytics. Mike, thanks for being with us again this week. And I made the comment to you before we went live that, man, just a tough way to close out what was a fairly uneventful session for much of Wednesday's trade.
It was, and we had a pretty nice return after the holiday break on Monday, Jesse. And I think two things came in that really disrupted and contrasted the trade that the wheat weather was getting support from in both Black Sea and U.S. growing areas. And also the idea that we've got some South American weather to talk about. But two things that came in that seemed like they hit the news wires, and I saw a lot of big movement in gold, a lot of big movement in crude oil, a lot of big movement in the dollar was, number one, President Trump talked about 25% tariffs on autos and chips and pharmaceuticals. That sent, I think, the gold to new record highs, changed some of the dynamics on the spreads, kind of brought us back to where some commodities were rallying off that news, some commodities breaking lower off of that news. I think probably Hogs got caught up in that, as well as the technicals from when the Feb went off the board at $90 a couple days ago. But then later in the day, the news that came out that bothered me the most was the issue with the United States and Ukraine. The relationship there seems to be souring. It's getting more friction. President Trump essentially called, Zelensky from Ukraine a dictator as we closed out the day trade session. That seemed to me to bring in a lot of bullishness in the dollar and in the bond yields, and it broke that equity market apart a little bit more, especially in the Dow Jones. And so got a kind of a flavor of a risk-off trade as we got towards the end of the day. I don't want to see that right now. I really want to keep the momentum of the strong wheat bias very much in play. So key commodities like copper, we'll probably talk about here in a few minutes. Big deal there from a standpoint of them softening after making multi-week highs.
Yeah, I want to get to that part of the conversation, but I do want to start with the weather. We got all this noise and issues going on geopolitically and more, but I think the weather, to your point, is just as important here. Let's talk about South America specifically, and some of the private estimates, we're seeing those coming out here, still calling for a big soybean crop out of Brazil. We've had issues in Argentina. So, I mean, what's the latest you're hearing in terms of the weather? Walk us through what you're seeing on some of these maps and more, Mike.
Yeah, there are still issues from the colleague I talked to, my primary colleague in South America, and also what I'm looking at on key maps and surface moisture data that I'm getting from key growing areas of both Argentina and Brazil. There are still areas in both countries that are suffering from production problems. I would probably frame it right now, Jesse. 2 weeks ago, we were losing a lot of bushels. This week, the trade's probably thinking, are we losing that many bushels? Probably not, because we've seen some improvement, but net, we are probably still losing bushels and not gaining bushels. And more specifically in center west Brazil, that's the area that I'm going to start focusing on a lot more as we get to March. Why? Because in March, that becomes the mid-season, and that means we get into the beginning of summer in center west Brazil. Last numbers I saw on second corn planting, safrinha corn planting, in center west, especially Mato Grosso, which is that bigger diamond up towards the top of the map. Mato Grosso planting specifically up about 16 percentage points last week to 36%, but that compares to about 60% a year ago. So either acres or yield, I'm not going to be as high on with you as USDA at this stage of the game, because there's more rain expected in after 5 days. Dry relatively now between now and the weekend, but then next week it's supposed to rain quite a bit in that area again. So I don't think they're going to get as good of planting done, or they're going to be under duress as they plant more in March. Turning to Argentina, Probably about 50–60% of the crop is in decent shape now from what I'm picking up after the rains, but that leaves 40–50% that is not in decent shape. And so here again, I think we probably lost some bushels, and we're not going to get those bushels back. And in that 40% of the area that we're still struggling, probably losing some still at this point. So I think USDA is still too high on the numbers, and I think the trade's trying to trade that, but they have to watch the wheat and they have to watch those outside markets because this weather market's been around for quite some time.
Yeah, and thinking about if we continue to have delays, obviously the longer we push back soybean harvest and planting of safrinha corn, I gotta think that that's going to affect the corn production in Brazil downward. I mean, what are some of the key data points you're watching with that right now?
Yeah, if you look at the graphic here and you look at that arrow, we'll start there, that arrow that's pointing up. That's that calendar that shows you when we get to planting of the second crop, and then when we get to mid-season, and you can see mid-season in gray for that safrinha corn starts at the end of February, 1st of March. And you can see in the above that the actual production map from USDA. You've got almost 40% of the whole corn crop in that one area that I put that diamond in on that previous map. So I'm going to suggest to you at this point, Jesse, that USDA is carrying a 5.7 yield right now. I think we're no better than a 5.5 yield, which is where we were back in that 2019-2020 crop. If I'm correct about that, using the acreage base down below on the table of 22.3 million hectares, we're probably talking about a 122 crop as opposed to USDA's 126. And that's just because of the 5.5 yield. If we took some area away from that, it could be even below that. So I really do think that it's going to be a struggle to get above last year's crop of 122 at this stage of the game.
It just seems like, and I wonder if some of this concern has maybe been what has helped support this corn market as of late, Mike. It's felt to me that corn has had its days, its ebbs and flows, but it has felt really supportive. I guess this might be one of the reasons why corn stayed supportive.
I think you're 100% right, and you can see it in the spreads. The July D's corn spread is still stuck up around 40 cents premium to the July contract, whereas the July Nov bean spread has really fallen out of bed since the end of January, and I think it closed at about 12 or 13 cents premium to the July. It too was up around 35–40 cents back about 4 weeks ago. So the trade has definitely moved towards a buy corn, sell bean mindset. I think one of the things that might be out there too, Jesse, that's added quite a bit of strength to the corn and not forced a lot of liquidation is the talk of year-round E15.
Mm-hmm.
That was initially something we found out from the Trump administration. Last week, he kind of really laid out the groundwork and cemented the idea that Brazil was going to get dinged with some tariffs, whereas we're at 2–3% on Brazilian ethanol. They're at 18%. He specifically put out a White House note about that. I think it was on the 15th, and the trade caught wind of that as we closed up Friday and then when we came back on Tuesday again. So there are, I think, quite a few areas that we found some fundamental support for the corn, and that's where the market probably does have quite a bit of premium. That being said, with that kind of premium, if I'm right, you're going to be at a point pretty soon in the corn market where you're going to need some friends, and that's why that wheat market is so important to me.
Yeah, I couldn't agree more. Let's look at that wheat copper spread real quick, and then I want to talk some more soybeans with you. But just thinking about, we've been tracking that correlation between copper and wheat, and you talk about wheat being the leader to the upside, needing to be. Obviously, it was the downside leader on Wednesday. So, what is this correlation telling you right now?
This has been such a good friend to us on the analysis side of the equation. And I think simply put, it's because both these commodities are trading more of the emerging market sentiment, emerging market currencies like the Chinese, the Brazilian, to a lesser degree, the Russian ruble. But that has come on really nicely in the last 2 weeks as well and helped support the wheat even more. But you can see on the 6-week relationship on lead month futures between these two seemingly separate commodities, the relationship between them is still a positive 91% in lead month futures. And so as long as we continue to see that type of positive price correlation, If the copper sinks because of some of the things we've talked about, the tariff talk, the U.S.-Ukraine relationship, and maybe Russia getting a leg up and maybe creating another wave of fighting and bringing in some more troops, which I'm hearing right now, that's going to disrupt probably that risk-on mindset. And copper's kind of caught right in the middle of that, along with the fact that China did put out some new housing data in the overnight markets, and they aren't really getting any better right now in the new housing starts and the existing home sales over there. And that property market, as we know, has been the leader to the fundamental weakness and that deflationary pressure that China continues to face, forcing them to have to be more of an export market. And that right there is the rub between the United States and China when it comes to President Trump and President Xi and their tariff negotiations that are upcoming.
Mike Zuzolo with Global Commodity Analytics, our guest analyst here today on Market Talk. Let's talk a little bit about that pork and bean trade that you and I discuss from time to time, as we saw a really tough day in the hog market Wednesday, and then beans to finding some of that pressure. And let's look at a weekly soybean chart here, just for a little bit of a setup here into the livestock side. But again, soybeans, watching South American weather, other issues. I'm still very concerned about this soybean market as a whole. What are your thoughts right now on the bean trade?
Yeah, I am too. The trade came out, a private trade analyst came out with a 171 Brazilian soybean crop, and that seemed to seal the deal for the beans to go ahead and follow the wheat and the corn lower on the close on Wednesday's trade. You notice where we're at on this weekly chart. After 3 weeks ago, we tagged that 52-week moving average, and look at how long it's been since we've been able to go above that 52-week moving average on a close. That chart stops in August of 2023. It's been well over a year that we've been able to get above that 52-week moving average. And so that's number one. I think number two is being at 1031 up against that wedge with overbought conditions makes me nervous. And number two, we often talk about those three simple lines, 1040, 940, 840. And when you go through 1040 on a monthly close, it can oftentimes, in my opinion, bring in an opening up of the downside to 940, and in terms of an eventual swing to the downside in the marketplace, Jesse. And so I think we're really on a knife's edge, so to speak, when it comes to the soybean complex. We continue to see the meal try and fight back. The meal weekly chart does not look anything like this because it's been primarily down, down, down. So I'm hoping that maybe we can get a buy signal out of the meal, and that actually turns the soybeans around. But we got to get off the HPAI bear train before we can do that. So that's something that I'm watching.
Yeah, good point there. And that'll help us segue into the livestock trade. I mentioned hogs. You mentioned it earlier as we got that Feb contract off the board. That might be a catalyst here. And tough day down in hogs. And this chart is looking at a few different things, beef, pork, and eggs, which everyone's talking about the price of eggs right now. As you look at this protein sector as a whole, what are some things that stand out to you right now?
Well, you look at $5 a dozen, and I'm doing quick math. You're talking about 50 cents, roughly 50 or 60 cents an egg at this point when it comes to what it costs to feed your family on a protein like eggs right now. And that's why that beef side and that pork side have been able to stand up so well. I think the sad part of this situation, or the downside part of the situation, is the hogs have had a tremendous run. The bellies specifically have really had a strong run, but seasonally they really kind of get weak in late February into early March. And so I'm probably looking at the cutout price for the pork staying below $100 at this point. And so that means to me that the negotiated cash price for cattle has fewer friends out there. And you can see how this negotiated cash cattle price has been able to be supported by both these factors, along with some weather. And so that's probably the story that this chart really tells a lot, is that we've had this cutout value for the pork side of the equation really support us in the beef market. I think seasonally that's coming to an end thanks to the bellies. So now we watch the egg market and see where we're at when it comes to that protein source. And right now the markets are expecting even higher prices heading into springtime because of the needing to recover from these bird losses, and then we'll have another migratory pattern as we break into spring. So eggs could be around to support us for quite some time, but we've lost some support with the hog market, in my opinion.
All right, let's go over to the cattle trade here. As I know, we got a cattle on feed report coming up at the end of the week as well. And cattle's been interesting. We've touched on this. I know Tuesday was a really strong day in feeders, but fats didn't do much. And then you look at Wednesday's futures, and we saw live cattle up a little bit, feeders down a little bit. So when you lean into this cattle trade right now, thinking about specifically live cattle, what are some things you're watching there?
Well, we've seen the feeder fat spread go down to about 45, or excuse me, about $65 and hit a major trend line. I think we featured that last week. We've seen that support come back. We've gotten the cattle hog spread down to about 108, 106 area. There should be some support there. We've also seen the feeder cattle test a major support line on their monthly trend line, and that 263 level for the low that we've got is the 2025 low, and that held. So we've got a lot of reasons to suspect that maybe we've got some support coming in the fat cattle market here in the short term, not to mention the weather side of the equation. That's where this April fat cattle chart comes in. We've got a market that's forming a very strong wedge in the top part of the chart with the dashed lines, and then on the bottom part, the stochastics, the oscillators, that momentum mindset that we talk about, it's trying to turn maybe into a buy signal, which would suggest that we could try and test that 50-day moving average of 196 plus. If we close back up above that moving average and get that quote buy signal on the stochastics, then we might be able to recover pretty nicely from this recent break. That's probably going to be, though, put right in the middle of whatever the cattle on feed report says at the end of this week.
And let's talk about that a little bit. A few of the estimates you shared with me, and we've been seeing these estimates, month by month. They've mostly been coming in as expected. What's your feeling going into the February set of numbers?
Jesse, I can't remember how many months it's been that we've had either a 6 or 8 or 10% and even 12% placements range on the newswire estimates. And so let's be honest, we don't know what is out there right now in terms of in the private trade and in terms of placements. And the only thing that I would say is to get us above the average number here on this chart of 102.2 for January placements and get towards that 106 number, it would probably have to be that the cold weather just pushed more cattle or cattle that were being held back another month or two, went ahead and got them moved into the pens and into the feed lots at this stage of the game. But the placements numbers always tend to take us to where the on feed number ends up being, and we just can't seem to get away from that almost 12 million head on feed number. And what we got to do at this stage, and I've probably said this before over the course of the last 3 or 4 months, we've got to drop those placements enough. We go below 11.5 million head on feed, and then I think the trade starts to think, okay, now we're finally going to start losing the production side of the cycle. But USDA has done a very effective job in their last 3 reports: cattle on feed, annual cattle report, and then their WASDE report last week, where they added 775 million pounds to commercial beef production versus the prior month, a huge increase. And it just puts us about 200 or 300 million pounds less than what we did in 2024. So as long as we still see those kind of numbers and that kind of poundage come, it's probably going to be difficult to really kick these recent highs out and take these recent highs out. So a defensive posture, I think, is what we're going to have unless these cattle on feed report numbers Friday really suggest something different's coming. And that goes back to the previous chart, where any kind of retracement rally we see, I'd be very active and very eager to get catch-up hedges in place.
Does it feel like feedlots for the time being have lost a little bit of control in this cattle market?
I think possibly, but I have heard from some cattlemen, especially going into the annual cattle report, that they're just not reporting anything. Yeah. And it's kind of like the grain monthly WASDE reports or the acreage and seedings reports. They're just not reporting anymore. Producers aren't, and they just kind of stopped giving that raw data to the government. And I think that's what we're living through in the cattle right now.
Good thoughts. Good thoughts as always today. Anything final you would share as we close it out? Anything you'd reiterate to folks, Mike?
No, I think the big thing to watch here going into the end of the week are the copper, the wheat, the gold. These are the ones that really were the stars to give us the upside potential and keep that corn ball rolling. And if we lose those, then it's going to be hard, I think, for the corn to keep and sustain these rallies. So, getting into a hedge mindset before March comes around, not a bad idea. And, obviously keep an ear out for what's happening in South America.
When it comes to gold, who knows, might see more fireworks if they do that audit of Fort Knox like Elon is talking about. It's something. It's always something in the daily news cycle we got to watch in these markets for sure. Mike, if folks want to reach out to you and have a conversation, I know they can find you very easily online. How can they get in touch?
Yeah, go to globalcomresearch.com, and it's globalcom with 2 M's, research.com, and you can sign up for a trial or give me a call on the toll-free line.
Mike Zuzolo, Global Commodity Analytics. Always appreciate it. Thanks for being with us this week. We'll talk to you next week.
Thanks, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.